In this video, I will take you through a refined step-by-step strategy using Heikin Ashi candles with EMA Crossover to create a structured, high-probability trading setup. Heikin Ashi candles are simple trend indicators that simplify market noise by providing smoother price action. Unlike other candles, they do not require the knowledge of various candle patterns. It's however important to know a few basic elements. For instance, the opening price of a Heikin Ashi candle is the average price of the preceding candle. On the other hand, the closing price of the candle is the average of the opening, low, high, and close prices for the specified period. Combining this with EMA crossover enhances the overall effectiveness of this strategy, as EMA helps confirm trend direction and shifts in momentum. Let's set up our trading screen. First, change the candlestick type to Heikin Ashi. For this, let's click on the candle icon at the bottom and select Heikin Ashi from the options. This helps smooth out price action and makes trend easier to read, as you can see on the screen. Now we will add two exponential moving averages. Let's go into the settings. The default here is the setting 9. This is the short-term EMA, which will help us track immediate price momentum. We will open the second one and modify the settings to indicate 26 periods. We will also add the volume indicator. This setup will have a higher chance of success if it is preceded by a cool down phase. Bullish and bearish formation is evidently clear, so now we will look for small bodied Heikin Ashi candles or doji formations. These indicate that momentum is slowing down. It is important to remember that the price must always stay above the 26 moving average during this phase. If price starts to dip below this line, we are likely in a weak market. Once we have clearly identified the consolidation phase, it's now time to validate the trend. We would do this using multiple time frames. First, we will check at a higher time frame and see that the trend is clearly making a higher high and higher low. We are all set to move to a lower time frame. For instance, if you were using a daily chart for a higher time frame, we can now move to an hourly chart. It is however important to note that at the lower time frame, the trend should not break, that the lower time frame trend is leading the upper time frame. We will now look for our first indication, trend initiation on Heikin Ashi. We should see at least two consecutive bullish Heikin Ashi candles which have no lower wicks. This signals that buyers are stepping in and momentum is building. And this is where a lot of traders go wrong. They just look at the candle formation and enter the trade. Any candle formation or any market move which is not supported by volume cannot be effective. It is therefore critical for us to get volume confirmation before we move ahead with our setup. We will look at the volume of our latest candle and compare it to the preceding candle. If the volume shows a clear spike, it means that the buyers are jumping behind this trade. As a secondary confirmation, we can also look at the volumes in the past when a similar breakout was happening. If the volume shows decline or if the volume stays put, it means that the move lacks motivation. Now we wait for the 9 moving average to cross above the 26 moving average on the hourly chart. This is our technical validation that short-term momentum is aligning with the long-term trend. If the EMAs cross are angled sharply upwards, it's a strong sign that momentum is increasing. One more check. Before entering the trade, we will check whether the Heikin Ashi candles are holding above the 9 moving average. If the price remains above the 9 moving average, it signals that bullish momentum is still strong. Now that all our conditions are met, we are ready to enter the trade. For this, we will open the trade at the open of the second bullish Heikin Ashi candle. We have already confirmed that this is supported by volume. We can place the stop loss at the open of the first candle that initiated the trend. We can also place this at the swing low or the 26 moving average line. This will depend on individual risk tolerance. To lock in profits and avoid unnecessary losses, we should follow a disciplined exit strategy. Our first signal, if we see a bearish Heikin Ashi candle with a long upper wick, this indicates that the buying momentum has now slowed down and people are instead trying to take profit. Also, when we see that the move price is breaking below the moving average line, it also suggests that the momentum is weak. Now let's go through a few examples. Let's first look at this. This is a Coke stock I won't go into full detail, but let's have a quick look. So here we see that there's a crossover where the short-term moving average moves above the long-term moving average. We see that the price continuously holds above the short-term moving average, and then we see our initiation candles. The initiation is very clear. It is also supported by strong volume. So if we would have placed our open over there, we could have easily tracked it all the way until we saw the exit signal, which is a bearish candle reaching the price line. Let's quickly go through one more example. This is the Johnson & Johnson stock, ticker symbol JNJ. In this one, we see all the classic symbols. So starting off with the consolidation phase and a trend. As we move to a lower time frame, we can again see that the price is holding above the moving average line. And again, the sign of trend initiation supported by volume, and the price continues to hold. We could have opened our position over here and tracked it all the way up until we saw our exit signal. I hope you liked this video. Please leave your thoughts and questions in the section below, and let me know if you want me to cover a specific topic